put the nail in the coffin on the economy. Are you?
Not on the economy, but we're in a downturn. And sadly, it's a downturn that's being caused by Fed monetary tightening in response to the things that are going on environmentally related to inflation, the war, and shutdowns in China. And the critical thing for the market now is when the Fed pivots. And so we're in an environment where things getting worse are actually going to have a great setup for when the Fed's able to do that. I think we're all surprised at the pace of deceleration that we're seeing. And so we know the Fed's going to tighten at the next two meetings. We know we're going to get 50 basis points in June, 50 basis points in July. And then I think it sets up from a timing standpoint for an August, September, which could be reasonably good if the Fed does pivot. I will tell you.
Why do you think they're going to pivot? Why do you think they're going to pivot? What gives you any reason to believe that they're going to pivot? I'm just curious because I keep hearing that from people, and I'm wondering what backs that up.
What I would tell you is the pace of change that we're seeing in deceleration. Look at Snap. They reported earnings on April 21st. That is only a month ago. Look how quickly things decelerated for them. Look how quickly they had to warn. In addition, we're seeing a lot of things. Maybe
they did a bad job with their guidance too. I mean, people are just are also taking this. Oh, the environment deteriorated so much over the last three weeks. Maybe they didn't do a good job when it came to giving their guidance. I don't know.
Or things got worse rather quickly. And when you look at why the Fed has to maintain their stance, it's for two reasons. It's inflation expectations and wage pressure. And the key is that labor could be weakening faster than expected as companies realize that they've overhired. In addition, you had Bostic speak yesterday about pausing rate hikes in September. You had Mester talking about reassessing the hike path come September. You had Bullard, who's known as one of the biggest hawks, talking about rate hikes in 23, 24. Now, that's out there. I get that. But you're starting to see a softening of the rhetoric. Now, again, we don't think we're at the bottom. We're in a downtrend. We think most of these rallies are bear market rallies. Our playbook has been when the Fed is the storm, you have to run the ball. And so we're staying in high quality. When the Fed is supportive, you want to pass the ball. And we're not in that environment. So we want to give ourselves the optionality of staying invested, but in the right way.
Right.
So that when the time comes, we can participate.
I'm thinking maybe the rhetoric simply only calmed down because the market's gotten the message already. I mean, the Fed has beaten it over our heads at this point. We know what's coming. The market has already kind of done part of the Fed's job for it, so they don't need to keep doing it theoretically anymore. Pete, I see somebody who's cautious, I think is fair to say. You trimmed at least 20 calls, you say, since yesterday?
Yeah, well, just looking at the markets that we've got, Scott, and we've talked about this a couple of times now since I bought Goldman Sachs right after or right before earnings, right around the earnings time. And outside of that, that's the only stock buy that I've made this year. And I think a lot of the time, I think that the producers and other people have said, Guy, are you not really finding anything? And the answer is no. Given the backdrop of everything that everybody just got done talking about, whether it's inflation, whether it's the job inflation, whatever you want to point to, Ukraine, China, whatever it is, there is so much going on, Scott, that I just haven't had. I still have that cautiousness about how I intend to move. And as you and I have talked over the last month or so, I've definitely been increasing what I've got on the put side of things. Now, I've trimmed some of that as well. Everything is about discipline for me. Discipline with the options. Most of the options that I sold turned out to be somewhere within the energy space and others. That's not a negative for the energy space. I am willing to jump right back into any of those names. But some of those names actually were hitting 52-week highs, and the options were performing. I think you've always got to stick with discipline. It's exactly what we're trying to do. So I look at my option positions right now. I'm about half of where I was a week ago. And then I look at the stock positions. The only change was Goldman Sachs. And it's held in exactly what I wanted it to do. I intend to hold on to this stock unless something dramatically changes. And I will continue to sell very high implied volatility options against that and the other stocks that I'm long for as long as it takes, or it gives me the opportunity to continue to do that. That's exactly the game plan that I've got for the stocks. There are a couple of stocks out there. I will give you a little bit of a hint. There are stocks out there that are definitely on my radar that I am looking at very closely, that by the end of this show or the end of this day or maybe in the end of this week, that I certainly think that I'm going to be positioned in buying some of those. But until then, right now, I've only bought one. Yeah.
Didn't you used to own Snap? I can't remember.
I never owned Snap the stock, but I did have many times where I've had options in Snap, yes. And that name, you know, you can just take a look. This is